Hi, and welcome to another daily recap. So this is day 48, July to 2024. So today I traded just EU and I took a loss, and the session was New York. This market price was FSB and the revenue is -$54 considering the spreads and commissions. And I gained -1 hour with and I entered in the M15 time frame itself. So seeing the news, I decided not to trade initially because there were news right from 10 a.m. to 3 p.m. All were red folder news. So I initially thought of not trading this day, but I just wanted to see the price action whether it's smooth or haphazard way. But when I looked at the price action, it was a bit smooth as usual. So I didn't want to sit on the sideline, so I just sat on the desk and started to analyze the charts. So this is the daily where you can see the price has swept the buy side liquidity. So first, I'll tell you the structure. The swing is bearish. Internal is also bearish. This is actually the swing structure which became bearish, and this is the swing range I'm trading with. Daily swing low and daily swing high is somewhere here. And the internal structure is bearish. You can see the red lines or the internal structure. So this is a strong and this is a weak one. It's already been liquidated once, and it kind of formed somewhat equal lows. So this is the daily supply where the price has went up, liquidated the buy side liquidity. And once the buy side liquidity is taken, obviously the next target would be the sell side liquidity, right? So, so you can see the second point here. Price took the buy side liquidity with a news on Sunday. Thus, I'm expecting the price to come down this week to take out the sell side liquidities. So there are some large pool of liquidities here. You can see the previous weekly low, daily equal lows, and this week daily swing low. So this is kind of low resistance liquidity below here. So once the price comes down here, like it can just rally down and you know take out this daily swing very easily. So in short, the daily bias is bearish because buy sell liquidities are taken. Now it's going to take out the sell side liquidities. So the daily bias is bearish. So this is the 4-hour structure. This is the strong internal, strong swing high and strong in weak swing low. So this is a swing range that I am dealing with. Currently, this is my internal range, strong internal high and strong weak internal low. If I zoom into the internal structure for clarity, you can see a price has pushed down, made an internal breakout structure on the downside. Now it is pulling back up, but you can see the price was in a range for the in the last week, and now the price came up, took the buy side liquidity, and this. How do you know that this is liquidity rate? I confirm this with S&P divergence with the XY that the bullish run is just a liquidity run. Uh, Mostly when there is a liquidity sweep, it would be a weak break, right? But that week is obviously is very clearly seen in daily, but in 4 hour it was a body close above. So I confirmed this with the XY and it said that it's just a liquidity run. So you can just see the annotations like shorts are of high probability when the price taps the 4 hour supply or makes it chop and look for the what will be the next step when I know the bias is bearish. Look for the minor pullbacks in lower time frames and take shorts. Simple, right? So the 4 hour bias as well as the daily bias, which are the main higher time frames, they are telling me to take shorts. Okay. This is the 1 hour chart. This is the strong swing high, and this is the weak swing low that I'm dealing with. Currently, this is my internal range, strong internal low. So these are contradictory. So weak swing low and a strong internal swing low. So I know this is contradictory, but it is what it is. When I zoom into the internal structure, this is the strong internal low, this is the weak internal high. So I'm expecting the price to take out this weak internal high, but the high time frame bias is bearish and they are telling that the price will come down. But the thing is, swing is bearish, internal is bullish. There is a huge push down with the news. So this is the news candle, most obviously when there is a push down like this, uh, the high of the news candle has ton of liquidity and most probably it will be traded. So there is a possibility for the price to go up and take out that uh, the buy side liquidity and then come down to take out the weak swing, yeah, weak swing low. So yeah, bullish divergence with the XY at this POI may indicate that the price can start to go up and take out the buy side liquidity. So this is the buy side liquidity I'm talking about. Once that's taken, price can start to come down. Price may not, or price can go up, mitigate the 4 hour supply, and then it can start to come down. So there are a lot of ways that the price can come down. At any point, the price can come down. But currently, so the session, so since this is a 1 hour chart, London will consist of only 3 candles and New York will consist of only 3 candles. Only I'm going to trade only 6 candles, right? So what will happen for the session? I'm, I must know that. So for the session, I can expect the price to go up to take out this buy side liquidity. So the medium time frame narrative, it is saying that the price is going to go up in the session. So that's what I want. My medium time frame bias is bullish. I want to trade longs here. So this is the case one. So I expect that the price to the longs are actually phase C and shorts are actually phase B. Since I took a short, it was phase B short. And, but initially my game plan was to take the phase C longs. So this was my first game plan where the I expected the price to take make a chalk here and then there will be sell side liquidities here. So I expected the price to come down, take out that sell side liquidity, and then once it's taken, a ton of liquidity will be available here, and price can, using that sell side liquidity, price can make the actual move and then continue making that move. That's what I indicated here, just for my reference. So trading the FACI longs, price mitigated the high probability demand. So why it's high probability? Because it has 7 out of 8 criteria met, and it is also supported by a bullish S&P. Thus, I need a formation of a sweep zone to support my session bias. That's all I want. But this is a session update at 8:30 GMT. The price took out the small internal low. Actually, I didn't mark this during the pre-session analysis because I didn't I didn't know that this is a small internal low. So once the price started to make this kind of order flow, then I realized that okay, there is some bearish order flow within this strong internal order flow. I mean, a strong internal bullish order flow. So price can come down using this order flow, and it can also take out the internal strong internal low because remember the uh, high time frame bias is bearish. Price took the small internal low. This means that the price has made a failed reaction to the demand. So yeah, one more confluence is that price actually reacted to this demand, pushed up and then again pushed down, and it made a failed reaction. So this that I could trade with the bearish order flow, which could potentially take out the weak swing low. Also, there is no significant demand that could make the price reverse. So once this demand fails, there is uh, there is low resistance liquidity here. This acts as a vacuum for the price to just rally down and then take out the strong internal low. And also there is news. News likes two things. One is it likes strong lows, and second thing it likes vacuum. So more confidence is added for the price to come down. And yeah, during the London session, this is the H1 POI. You can see this is that POI that marked here. I expected the price to come up and come down. So I don't want to miss this move, high probability move. Thus I jump down to M5 to see if there is any liquidity purge formation. So there was, yes, this liquidity purge, price went up, pushed down, made a fake break, and then once if the price purged this liquidity or raided this liquidity, then I could enter with that liquidity candle. So that was my intention, but price didn't make it up. It didn't take this liquidity before the London session ended. Before the London session, so I didn't want to take the high probability setup in a low probability area, I mean low probability timing. So I just waited for New York. This is post London update. You can see the liquidity is not purged. but M15 was forming a kind of equal high. So I decided to wait for New York momentum to kick in and purchase liquidity, and then I can trade with that momentum. So this could be the momentum. I mean, this could be the manipulation during the New York, and once that manipulation is done, and New York would start to distribute. So that was my expectation. And yeah, another session update. Price took the yeah. One more thing is that this was actually the H1 move, right? And it does not have any minor pullbacks. So if there is no minor pullbacks, the only liquidity available will be right here. So I expected the price to take this liquidity and then come down, but you can see actually price made a small leg down and then it pushed up. So there is also leg inducement for this POI. So this POI also becoming high probability. So, but there are some risk factors associated with it. You know, uh, you can see all the positive confluences adding to this trade setup. So you can remember the high time frame bias is bearish, and the small internal order flow is also bearish. So this becomes a small internal, you know, strong high. So once the order flow is formed in H1, so it takes ton of money to break it. But this is a strong high, and I'm trading with a small internal strong high, and this POI has been failed. So it gave a failed reaction. So which means that this POI is has a high chance that it can be the price can move below this POI, and once the price moves below this POI, there is nothing to stop the price. There is a vacuum, there is low resistance liquidity and the vacuum and news. So definitely price will come down. Price has high chance to come down to take out the weak swing low. Yeah. But if you keep your mind open and analyze the market from a different perspective, you can also see the risk factors associated with the trade. The first risk factor is that there is a ton of low resistance liquidity here. So price can just go above, take out, though this is a strong high, price can go up and take this liquidity, use this POI, and then come down. That's the first risk factor because I'm going to place my stop loss just above this POI. Asian highs are not yet being swept. So if the London has made the high of the day, then high chance that the price will not go up above that London. But since Asia has made the high of the day, so there is a chance that the price can go further up to sweep the Asian highs. And also the this demand is not yet completely failed. Price has come to the extreme pivot of this demand. So this pivot can hold and the price can this pivot can push the price up and price can start to go up. And also this POI hasn't swept liquidity. So it has just a score of 6 out of 8. And also I'm trading against a strong internal structure technically. So these are the risk factors that I must keep in mind before trading. So I know if I lose, these are the risk factors. Maybe one of them played out or all of them played out. And when the price came up, I placed a short position using M15 and I placed my stop loss above. So this was the liquidity candle with which I placed the order. So yeah, this is the liquidity candle I placed and then it broke the high. So this white candle I placed my order and with my stop loss above. And yeah, so these are the criteria for my trading. So it is a non-OT region because actually this is basically shorts. It was actually non-OT region. Like uh, if I show you the H1, sorry, it was actually in OT region. Sorry, I can't take shots from here expecting this swing low to go up, but I can take shots from here expecting the swing low to come down, right? So what is the here and there? It means that the price has went above the fib region. This is 50% of the fib of the range. So prices went above the 50%. So there is high chance that the run to external leg can start. So that is one criteria. Yeah, that is in non-OT and There is a medium time frame chalk. Yeah, actually, there is not chalk. There is more than that. There is small internal structure that is in support of me, and there is no JSMT divergence actually. You can see I marked this JSMT a bearish JSMT divergence, but it was not clear. Actually, it was not clear. So I can take off that JSMT divergence from here, and also POI. Yeah, this criteria is also satisfied. So 3 out of 4, which makes it as a medium probability trade. And these are the POI criteria that was met. And how I entered using H1 lead. I showed you the lead earlier. So this was the H1 lead. I entered using M15 liquidity candle. So it was a medium probability trade with a ton of risk factors. Sometimes it may play out, sometimes it may not play out. This time it did not play out, and I just took a losing trade. So it is what it is. So this was my risk factors. These are my trade management. And this is 5 minutes before the my stop loss was hit. Once the supply was liquidated, I definitely know that my position will be hit. My stop loss will be hit. I just left the desk. I didn't see anything, and off the desk with -1. So this was around 2:30 GMT, and the my stop loss was it at around 245 or something. But yeah, it was a -1 RT. And this was my expectation for the next day. I expected the price to raise this liquidity and then start to come down to take out the strong internal low as well as the weak swing low. Or the price could continue going up to take out this weak internal high to tap into to mitigate the 4-hour supply. So let's see what's going to happen tomorrow. But for now, uh, it's a losing day. So how did I get affected by the result of the trade? I know it was a medium probability trade and I know the risk factors associated with that trade. Thus, I know I could be wrong and I just placed the trade with hope of my edge playing out and it didn't play out. Yes, my mental environment was preventing me from keeping the trade due to several risk factors, but I just believe in my system and took the trade. Yeah, the thing is that I didn't hesitate to take the trade. I was confident and I placed the trade with confidence. Also, I made up my mind that the trade was high probability and created S&P divergence out of nowhere. Yeah, you know, when you attach to a bias, you create confluences out of nowhere. So this is one confluence that I created out of nowhere and created an S&P divergence out of nowhere. But now I'm clear that the trade was medium probability and it has only 50% of success rate. But with the risk factors associated, the success rate would be much less than that. And obviously, the trade didn't play out. Okay, that's the end of the daily recap. See you tomorrow, guys. Bye.